In today's video, we're doing a bit of a tutorial and we're looking at the 3 do's and don'ts of getting started in investing. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first tip that I have for you guys out there is about practicing. You need to treat your demo accounts like they are live. After all, we are trying to run businesses, and that's part of the reason when it comes to failure. If you don't have perfect practice, you won't get the results you're looking for. Some of the methods that you can actually incorporate into your trading when it comes to the demo account side of things is getting yourself into bad situations. Thereby, go and get a demo account. Get it into a serious position that looks like a loss that would usually make you a little bit concerned, and then practice getting your way out of it. The other alternative is to start using it for all of your strategies. So if you plan to implement a new strategy, go it through on the demo side first. Don't just go straight to your live account. Another part that comes with all this, and this is more of a fact-finding mission for some of you guys, is when I've had some of my own students in the past, when they have come to me with a live account, I automatically put them on a demo for at least 6 months because I'm trying to get rid of some of the bad habits. If you use or bring out some of those bad habits in your demo account, guess what? It's going to reflect in your live account as well. So make sure you are using the practice side of things to the best of your ability. Use it to try out new strategies, use it to increase your skills, and obviously use it to test out and build your own knowledge bases as well. Now, the next one is about reducing your risk. To do this, you need to aim small so you can miss small. The bigger your trades are, the less you've got in the scope for things to go right. Now, of course, if you've got small positions and you're trading your way through, you're a little bit less emotional about killing off a small trade than you are killing off a big one. So I would much rather kill a number of smaller trades and then let the ones that do go well run all the way into the end so that I can then take a nice big fat bonus out of it. Of course, this isn't always applicable in management, so you do need to keep an eye on it. Obviously as well, when it comes to this, don't increase your position sizing when you're in a losing position. Personally, if it starts going in the wrong direction, I'll just kill it off to begin with. Now, the next do that you should always be doing is playing with the cash that you can actually afford. Whereby, I mean, don't go and use the funds that you're planning on using or the savings that you have for a house deposit or a car or starting a business. Use the money that you don't worry about if you're going to lose it. So at the end of the day, if you've got some cash sitting there aside and you go, oh, well, I've got to put this towards savings for this big purchase and for this item over here, then obviously don't use them. Use bits that you can consider to be disposable income in your investing. And then if you do have something go wrong, it's not as big of a hit to you. This is an important matter, particularly if you were getting into investing and thinking, I've got a lot of cash sitting there, it's doing nothing for the meantime, and I'm going to build it up. It's important to keep saving. Now, looking forward, the next one here is, and this is a don't, so don't chase the hype train. The reason behind this is, if you feel like you're starting to learn about a market or you're starting to see a lot of media attention on a particular one, the chances are the media's caught wind of it a little bit too late. Everyone else jumps and piles into it, and all of a sudden, you're left at the very end of the run with a pretty big position and it starts to fall against you. So don't follow where everyone else is going. Don't be one of the sheep. Look for opportunities that are going to be relevant to you and allow you to actually get a really good position out of it. The next one is don't make it flashy. I have seen so many trading strategies and so many people trying to show off what they're doing with their trading. Now, if you have a chart that has got 50 different indicators on it, it is so overly complicated, you're not going to be able to know what's going on. In fact, for the few indicators you might be wanting to look at, you're going to end up seeing a signal against one of the ones that are there. So the chances of that actually occasioning in a real trade that's going to be useful at the time that you need it is not going to be helpful. You have too many things to consider. Keep it really simple. It's a simple method. The KISS method, the keep it simple, stupid thing, is definitely the way to be going when it comes to your trading. The flashier it is, the harder it is to implement, and that includes with your money management strategies as well. If you have money management strategies that involve hedging platforms and everything else with it, yes, it's cool to know how to do it, but is it going to get you into more trouble than it's worth? That's the question you always have to be asking yourself. The next one is don't be obsessive. If you are finding yourself looking at your portfolio or looking at your trades, waking up in the middle of the night, looking at positions, there's usually a reason for it, and it's usually that you're over leveraged or you have too much in a position than you really want it to have. So if you are getting into that scenario, don't do it. When it comes to my trade, my stocks portfolio, I look at it maybe once or twice a week at max. If I'm looking at intraday trading sort of stuff, then I look at it for the duration that I'm trading it, but as soon as I walk away from the desk, I'm done. I walk away, I close my positions up, or if I do have things that are longer term, I don't worry about them for a couple of days. I'll have a look, and that's because I'm taking trading size or positions small enough that they will not matter if I do need to kill them the next day. So keep an eye on that scenario. If you do find yourself getting emotional or obsessive about looking at the charts over and over, and you'll know exactly when it's happening. You'll be pulling out your phone every couple of seconds to really look at it. So keep that in mind. The next one that I've got here is a bit of a bonus. So we've already done 3 do's. This is what you should be doing. 3 don'ts. This is what you shouldn't be doing. Now we're looking at a bonus. And this is about robots or expert advisors. There are 2 trains of thought. You can have robots, and they do well sometimes, and they will enable you to do it. But they lack the human element. Don't look at robots as a trader replacement. Look at them as a trading assistant. If you are going to use them, make sure you're using them appropriately. Of course, that human element really requires you to be able to look at the market, see what the current phase is, see if it's appropriate for that robot to be running, and of course, apply any of the fundamental knowledge that you may have towards the current phase in the market to see if it is applicable. Otherwise, what you need to know is when it comes to robots, they can't see what we see, they can't interpret what we see. All they are capable of doing is really looking at the core facts that they're programmed to do. Did this line cross this point? Did this crossover happen here? What is the result of the RSI right at this very second? That's all they can do. So don't anticipate them doing much more than that. Now, that's really all I have for today's video on this one. I hope you have enjoyed it. Let me know, send me your feedback, give me some questions. Contact me through talktoal@acy.com or through any of my other social media channels. I'm always available to have a bit of a chat. Now, let me know your feedback as well. I'd love to hear about it, of course. Don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.